Welcome to another amazing episode of Raising Private Money. I'm Jay Connor, your host, also known as the Private Money Authority. And this is the show where we talk about raising private money without ever having to ask for money. Here on the show, I have amazing guests join me, and today is no exception. I've got an amazing guest. He's CEO and founder of not one, but two commercial real estate investment companies. And his companies use something very different, cutting edge real estate analytics technology to source and acquire or build large commercial properties all across the U.S. Now, the way he goes about funding this is from over 1,000 private lenders or investors. His current portfolio has got over 4,400 units, and he has raised $325 million in private money. Now, what he does, he shares his team's unique and cutting edge real estate data methodologies to connect with data-driven investors. So if you're a geek, you're definitely going to want to tune into this show. Who share his vision. And what's his vision? Well, that data beats gut feel by a million miles. So over 10,000 real estate investors have taken his free real estate data analytics course on Udemy. And his course on Udemy, again, that's titled Real Estate Data Analytics. His course has got over 1,000 five-star reviews. In addition to that, over 5,000 investors have attended his multifamily webinar series each year, and hundreds of people have attended what he calls his Magic of Multifamily boot camps. Well, my guest believes that we are now at a turning point where traditional commercial real estate will combine with prop tech and fintech technology disruptors and will truly reach its potential as a tradable, highly liquid assets class that will rival and eventually beat the stock market in its size and scope. In just a moment, you're going to meet my special guest, Mr. Neal Bawa, right after this.
Before we continue, let me take 60 seconds to tell you about Multifamily University. Are you ready to take your real estate investing to the next level? Look no further than Multifamily University. Our comprehensive resources, including guest podcast appearances, educational webinars, the Real Estate Trends Toolkit, and the Location Magic course, are all designed to make smart investing easy and accessible. Plus, with no subscriptions, no upsells, you can trust that we're always looking out for your best interests. But don't take our word for it. Check out what our satisfied customer, Carlos M., had to say. Neal's presentation was filled with invaluable information that is not readily available to the average investor. This group takes you to the elite level of investing. Join the ranks of the elite with Multifamily University. Join us at multifamilyu.com and start investing from a place of knowledge today. Not only will you have access to a wealth of knowledge from industry experts, but you'll also be able to stay ahead of the game with our in-depth analysis of market trends and potential recessions or corrections. Invest with confidence and make informed decisions based on data, not gut feel. Don't miss out. Visit us at multifamilyu.com today or click the link in the description below. And now, back to the content.
Neal, welcome to the show, my friend.
Well, thanks for having me on the show, Jay. Very excited to be here.
Absolutely. I'm excited to have you here because my lands, you've raised $325 million in private money from individual investors. We definitely want to dive deep into how you've gone about that, your favorite ways to raise private money, lessons learned about what to do and what not to do when it comes to raising private money. We've got two primary audiences here for this show, Neal. We've got real estate investors that are wanting to learn how to raise private money for their real estate deals. And then we have another part of our audience that just want to be passive investors. They want to be private lenders. They want to invest, and we'll be able to talk about your syndication opportunity as well. But if you will take a moment, Neal, give us your backstory as to how you got to where you are now.
Sure. I'm a technologist, computer science degree. Data science is my major. And I got into real estate in reverse. You know, most people get into real estate by buying a single family rental or doing a rehab. In my case, I got into real estate by building a campus from scratch in 2003. So I was running a technology company, hundreds of employees. We had lots of money, and we decided we didn't want to be tenants anymore. So we built a custom campus for ourselves. The founder and the senior partner of the firm, I was the junior partner, had a lot of construction experience. So he mentored me through the whole process, and it was a great learning experience. And we ended up building about 6 more campuses by 2007. So between 2003 and 2007, we were building all of these campuses. And I was a minor partner in some of them. And all of a sudden, I got exposed to the benefits of depreciation because I had the big fat tech salary, and I was I was working in Taxifornia. So for people like me with the big fat tech salary that are Taxifornians, it's very important to all of a sudden get these depreciation benefits, and how it affects your income is just spectacular. And so that's what really pulled me into real estate. But with all of the benefits that I was receiving from depreciation, all of a sudden I had more and more money collecting in the bank. So by the time I had plenty of money, it was 2008. So my timing was incredible.
I hear you. Yes, I got my wake-up call to the world of private money in January of 2009 is when I got my wake-up call. I'd been relying on banks and just institutional lending until I got cut off from the banks in January 2009. And so that's how I got exposed to this world of private money. Well, you've raised a lot of private money here in your career.
That's right.
And so what are some of your favorite ways that you've gone about raising private money and finding investors?
I think the biggest thing that has worked for me is building an authentic brand, with the word authentic being the one that's underlined, not the word brand. A lot of people build brands, but I find that they're not necessarily authentic. So, as somebody who's a computer science graduate, as somebody that's into data science, I felt that was my strong suit. And I felt that given that I live in Silicon Valley with, if I throw a rock, it's going to hit a geek and bounce off and hit another geek, right? This is just geekland. There's lots and lots of computer science graduates here and data scientists and lots of people that understand technology and numbers and exponential worth. So I felt like I was in the right place. And so what I've done is I've worked very hard over the last 10-ish years to build an authentic data brand. And I've followed through on all of the different pieces of that. And I'll give you examples of how anyone else could do it, right? But I'm going to start with an example that's today's example. So this morning, when I wake up in the morning, I'll spend an hour and a half reading all of the newsletters that I'm subscribed to for real estate, and there's dozens of them. And I'll pick one that has some interesting piece of information. So this morning, I received a newsletter from a company called Local Market Monitor. And this is a company that basically ranks cities in the United States for real estate investment. And it's, I'm a multifamily guy, and this is a sort of a single family thing. But from the perspective of brand building, it's perfect. So a screenshot of Local Market Monitor was taken out of their article, right? And the article, the screenshot says best bets for 2005, and it's got a list of cities starting with Charleston, South Carolina, and then the next column says 3-year population growth and then job growth, right? So now what I do is I take that content, and then I have a Slack channel, and the Slack channel is called marketing-social-posting, right? So I have full-time staff doing this. So I throw that screenshot in there, and then I say the following words. A lot of people share information on their social, but what they really forget is that they're building a data-driven brand. So sharing something on social is not very powerful. Sharing it with your opinion is powerful. So I'm going to read off what I shared, right, on this. And I say in the Slack channel, Neal's comments, and my team will post this on all social. Local Market Monitor has published their best bets market for 2025. Very interesting list. Terrific to see Charleston, South Carolina at the top of the list. Fantastic market, a lot of room to run. But I'm even more excited to see Indianapolis in second position, because a Republican victory in last week's elections means tariffs being imposed on China, which means more manufacturing growth. And Indianapolis is one of the key markets that will see significant industrial growth. I won't read the whole thing, but you get the point, right? What I'm doing is I'm taking content that's come from sources that I like, and then I'm putting my personal spin on it as to why all of a sudden people should be investing in Indianapolis, right? Or things like that. And then I do this at least twice a day, 3 times a day. And I'm posting on LinkedIn. My team is doing all of this stuff using software like Hootsuite. And so they're designing custom graphics. So the custom graphic that was designed so that my picture was on the left. A quote about Indianapolis was at the bottom. And then the original source, that screenshot, was on the right. So now this is a custom graphic that was designed in about 10 minutes using AI and was posted on this channel. I took a look at it. I commented. I don't actually go on to social. People think that I'm on social media all the time. They're like, Neal doesn't actually do any work. He must just spend 24 hours a day on social media. Well, the last time I actually logged into social media was 2014, 10 years ago. But what I do is I have a team of people. Today I have a team. When I started out, it was just somebody on Upwork.com from the Philippines that I was paying 2 hours a day. Anyone can pay that, $6 an hour for 2 hours a day. Everyone can afford it. You make that investment in yourself. And now, of course, there's a huge team of people. About 10 people are doing investor marketing for us. But that gives you a sense of this, right? So I've been authentic to that data brand. I've created webinars. I'm doing a webinar tonight at 5 p.m. Pacific. I have 1,950 people signed up. About 400 will attend, about a 20% show rate. And that webinar is about the impact of the Trump win on commercial real estate and has 9 sections. So I talk about the impact on the dollar, the yuan. I talk about the impact on Bitcoin. I talk about the impact on tariffs, blah, blah, blah. Is this good for commercial real estate? Bad? What about interest rates? What about treasury? So you notice that I've given you 2 examples, both from today, of how I am building an authentic data brand. I'm not suggesting that this is the right thing for everybody, but what I'm saying is that you've got to be authentic and you've got to be continuously providing content. I hate social media. I don't like going into any of those apps. So I just created a Slack channel and I have people helping me, right? And at $6 an hour for wonderful people in the Philippines, nobody can say, I don't have the money for people to help me. Everybody has that much of an investment to make, right? So brand creation and then brand elevation and continuously doubling down on that makes a huge difference, because I have very geeky investors. They constantly send me content. So I think that I have the geekiest investors in America, right? Silicon Valley people, computer science graduates. They work for companies like Google and HP. And that's my niche, because there are roughly 6 million accredited investors in the United States. I need 1,000 of them to raise 325 million. I don't have any institutional capital. I have no family offices. I have nothing but these accredited investors. 1,000 gave me $325 million. That's all I needed. 1,000 out of 6 million. So you can build an extraordinary niche that's 1 out of 100,000 people that really believes in what you believe in, and those are the best investors. That's how I build my brand.
So let me unpack what you just said there. So what you're doing, you and your team, is you are providing on social media amazing content about opportunities and what's going on in the real estate investment world. And a result of that content is you're giving great value. And I suppose through that content, your subscribers and your number of people that are following you and subscribing to your channel because of the great value continues to grow on a regular basis. Is that right?
That's right. We just hit our 10,000th subscriber on YouTube. Instagram's a huge channel for us, and so is Udemy. So on Udemy, I create courses around real estate analytics. So these courses are courses that basically I'm taking real estate analytics, which is complicated, and dumbing it down by giving people a bunch of Excel spreadsheet. Go in here for this city, plug in these pieces of data, which are general knowledge, and then look at the result. And if it's green, it's good. If it's red, it's bad. As simple as that, right? So what I'm doing is I'm taking a complex topic that most people have trouble with, and I'm simplifying it, right? So the course is called Location Magic, how to figure out the best cities in America to invest in. And they don't have to really learn data analytics. They just have to follow a process that takes about 10 minutes to do. So, you could go to a water cooler conversation for a Christmas party, and you could hear one person says, Rogers, Arkansas is a great city to invest in. Another person says, no. Rogers, Arkansas sucks. It's Charleston, South Carolina. Well, how do you know which one of these people is telling the truth, right? Well, the answer is there's got to be some benchmark. So I create courses around that. And those courses allow people to make investment decisions based on their water cooler conversations and their list of cities. And so each year I get hundreds of people thanking me on somebody going and investing in Provo, Utah in 2016. By the way, Provo home prices are up 3x since then. And so they love it, right? And these people, they haven't invested with me. The community is about 80,000 people. The total number of investors is 1,072 as of yesterday. But that's okay. That's 1%, right? So the 1% I'm monetizing. The others are simply getting value, and they're going out and investing by themselves, doing whatever they want. And I'm perfectly happy with that, because they're also sending other people to me constantly to build my brand. So they help in some way or the other.
what I hear you saying, Neal, is that you're really leading with a servant's heart. You're leading with providing amazing value and content. And so you and I have got that in common. When I was cut off from the banks back in 2009,
Mhm.
and I couldn't use institutional money anymore, and I started learning about private money, I made a decision, and it sounds like you made the same decision, that I wasn't going to go about asking people for money or chasing or begging or persuading or trying to talk anybody into anything, because after all, desperation has got a smell to it. And the worst time, from my experience, to be raising private money and investor money is when you need it for a
Yep.
particular deal. But
Right.
what I did, Neal, is I put on my teacher hat. So here's my teacher hat, and my teacher hat says private money teacher.
Love it.
And when I started raising private money, I simply just I took on the attitude and the philosophy of I'm not going to try to pitch any deals. I'm first going to teach my opportunity. And I've got
Yep.
you've got 1,072. All I have is 47, 8.5 million. That's all I need for my single family houses around here in my local area. And so the philosophy is the same. I started teaching people the opportunity. You know what's interesting, from my 47 private lenders, none of them ever heard of private money or private lending. I don't think any of them even know what an accredited investor is, to tell you the truth. And none of them ever heard of self-directed IRAs. I love working with people that have never been introduced to this world of private money, because when you do that, we get to make the rules.
Right.
One thing I had a hard time getting my mind wrapped around when I started out was, traditional borrowing is you go to the local bank or an institutional lender or a hard money lender, and you get on your hands and knees and beg and put your hands underneath your chin and try to talk them into loaning you money. Where in this world, I'm not asking for a mortgage, I'm offering a mortgage, I'm offering an opportunity. Would you say that you're subscribing to all that same philosophy?
Very much so. I think that I find that when you're chasing money, when you're chasing investors and asking them and pushing them for money, you'll get some. But I think that's not the kind of relationship you want to build. Maybe people will give you money once under pressure, but a business is based on recurring revenue, and in this case, recurring investments. So you've got to have people giving you money the second time, the third time, the fourth time. And to do that, it's better to take a slightly slower approach. If over a 5-year time, you'd make 3x as much money and do 3x as many projects. But maybe the first year, it'll be a little bit slower than that, because you're basically building a brand-based scenario, right? All of the things that you just mentioned, Jay. I mean, those are all the things that have to be done and have to be done correctly. And it takes less time and less effort and less money now because of technology than ever used to. I use artificial intelligence to do tons and tons of things. So I have a 40-slide deck that I'm working on, and AI wrote all of the notes. Now I always edit them because it doesn't necessarily do a very good job, but it makes it much easier to edit something than to write it from scratch. When I create webinars, I go into ChatGPT 4 or Perplexity. These are my two tools. And I spend about 5 to 10 minutes talking to it. I turn on voice typing and I talk to it. I make mistakes. I said, oops, I made I said this wrong. But I talk for 5, 6, 7, 8, 10 minutes straight, which is hard to do. That's a massive amount of content. And then I say, okay, ChatGPT, structure this. And it structures it for me. And then I structure it for various different purposes. I say, structure this for my PowerPoint designer. These are the kind of slides that I would like. These are the sections. These are the types. It structures it. I copy paste that into a Slack channel. My PowerPoint designer is now working on my deck. Now, then I say, structure this for my marketing team and give them 3 email templates. And it writes email templates based on the content that I've created. And I send those 3 templates off to them. Then I say, give instructions to my graphics designer to create custom graphics. And it does that. And I copy paste it into a Slack channel for the graphics designer. These are all things that didn't even exist 2 years ago. So if you should be able to accelerate your brand and create massive amounts of high quality content in a 10th of the time that you could do before November 30th, 2022. That was the date that when ChatGPT came out. So as an entrepreneur, as somebody who wants to raise private capital, it's actually much easier to do than it has ever been.
I love it. Well, you have certainly tapped into a brilliant strategy, Neal, and that is leveraging the technology And your delegation reminds me of my father. My father's Wallace Connor. He's 91 years old next month, and he's in the middle of a 350 new home build project. I want to be like him when I grow
Jeez.
up. But yeah, he was known as the dictate, and that's what you did. He's known as the dictate, delegate, disappear man. So that's what you're doing. You're dictating, delegating, and getting out of the way and letting other
Well,
people do.
I like to, I measure the total amount of productivity that I have, but I don't measure the total number of hours. So I only work about 27, 28 hours a week. I take, 6 weeks of vacations in a year. And I like that. So, I'll do my reading between 7 and 8, and I'm working from 8 to 2, and then I'm done. But what happens is I tell people I work about 200 hours a week, and they're like, no one can work 200 hours a week. The answer is you can if you have 4 full-time executive assistants, and they're all very busy, and they're all doing very useful things. So I spend on an ongoing basis 30 minutes a day asking my staff for data, for visual reports on capital raising. I have about 100 reports on capital raising, right? There's social media channels, there's incoming lead flow, there's what are we doing with email drip campaigns? How many people are coming into drip campaigns? Where are they on the drips? So we have about 13 emails that are dripped on people after they join us on some basis. Then of course there's reports on whatever capital raises we're doing right now, right? So altogether, I have about 12 different reporting Slack channels, and those Slack channels have maybe a total of 200 reports. This allows me to be extremely productive, and it allows people, or it requires my people to be extremely accountable without working a large number of hours. Your systems, your processes define who you are, right? My moniker in the industry is the mad scientist of multifamily, because when I present up on stage, I'm always showing people at least a dozen systems, and people are taking screenshots of those and copying them, and I'm pretty happy about that, right? So flattery is is the best form of best compliment that anyone can ever get.
I love it. So let's move over and talk about your opportunities that you have for people that may want to invest. What kind of projects do you have going on now? And what opportunities do you have?
Sure. So I run 2 different companies. One basically buys properties, value-add properties for multifamily. We dabble with other areas like self-storage and industrial, but our core is multifamily. And then the other area is we build townhomes. We don't build single family. We don't build apartments. We build townhomes. Why? Because townhomes, in my opinion, are the missing middle. There's lots of great people building apartment complexes, and there's lots of folks like you and Lennar and KB Homes that are building homes. But the problem is the homes are too expensive. Even starter homes are too expensive. Only about 27% of Americans can afford the starter home that KB Homes is building today or Lennar is building today. And apartments are available, but have you seen the rent growth? I mean, the rents keep going up from time to, all this time. And there's a lot of people that don't want to go live in apartments. They don't want to deal with hallways. They don't want to deal with people running up and down the hallways, the smell of marijuana, a Rottweiler biting your kid. They want to live in a home, but they know that they've lost the race to buy a home, right? So average home prices in the US are $416,000. In most cities that I like for investing in jobs, they're over $500,000. The Phoenix is at 532, Austin's at 536. So most people can't even get the down payment done. And these days, the down payment is 20%. It used to be 3%. We don't get loans like that easily available these days. So people have lost that race, but they don't want to live in apartments. So one of my businesses just builds large townhome for rental communities. So now nobody's living above and below you. You've got a backyard. You've got a garage, maybe not 2 garages, but 1 garage. And then you've got, the other car is parked in the driveway or outside. And so you're living in your own home, but you're renting it. And so that project is called Mission 10K. We currently have 6 projects underway with 1,000 units in construction. We've got $50 million already invested in these projects. It's more high profit, but higher risk. So what I did was I spent 3 years and $20 million optimizing the risk. So I basically optimized the risk. So on the front end basis, I don't ask my investors to invest until I've already gotten to the point where the construction loan is signed. I don't know of any other developer that does that, because usually it takes $500,000 to $1 million to get to that point. So I created a company that puts that money up front. And whenever there's projects that go bad during that time, the company eats it. So no investor ever has to worry about that. But once the risk is done and the project construction loans close, then I bring the investors in. And now I'm able to accelerate their profits with that company. But there's lots of people who are like, no, I don't want to invest in new construction. They invest in my second company, Grow Capitus. And what Grow Capitus does is that it buys properties and improves them. And a lot of people do that. So the people are like, well, what is so special about you doing it? There's like 20 or 200 other guys doing it. My answer is an army in the Philippines. So I own a company in the Philippines with an army of dozens of people. And these people basically for $6 an hour follow 700 different systems and processes to optimize my properties. They optimize everything from delinquency to leasing to keep, making sure that my staff in the US is answering phone calls, to doing hundreds and hundreds of different reports, to getting local grants for tenants, in case my tenants fall behind. I gave you 5 examples, but there's hundreds of them. And that allows me to keep my properties more full at higher rents than other people. It's the use of systems and processes, hundreds of them, for value add properties. A typical value add property is 200 units. And my goal is to keep them at 97, 98% occupied all the time. And every time I get to 98, I raise rents. I fall back to 92. My leasing team comes in, generates massive amounts of leads. We boost it up to 98, and then we raise rents again. And we play this game for 5 years on a property.
I was going to ask about how long on average do you stay in on a property? So it sounds like about 5 years before you sell or cash out. Is that right?
Yep. 5 years for value add properties, 4 years for new construction properties. So, okay. But we don't do a lot of short-term projects. That's not our forte. I think there's a lot of people doing short-term lending, and good luck to them. They're doing well. I like to build things. I like to improve things. I like to see the benefits of all the different things that my team and I are implementing. And so for me, there is a satisfaction that comes with spending years on a project.
Makes a lot of sense. Well, Neal, you are an amazing human being with all the processes you put in place, leveraging technology, leveraging AI, and leveraging human talent all across the globe. I know we've got a lot of listeners here to the show that want to learn how to follow you, how to get in touch with you, how to get on your webinars, how to learn about where to invest in the United States. And we've got a lot of people that would be interested in being a passive investor with you as well. So what are some of the ways that people can follow you on social and learn about investment opportunities?
Well, I'm very lucky to be the only Neal Bawa with this spelling in the World Wide Web. So everything you need about me, read about me on the web, good or bad, is about me. There's no other Neal Bawa that I'm aware of. So the best way to find me is to just type my first name, last name into Google. Another way, if you'd like to really get involved with our webinars, like the Trump webinar that we're doing tonight, is to go to Multifamily University. So type the words Multifamily University into Google, and it'll take you to a site called multifamilyu.com. And you'll see our archived webinars. And you notice that even though the website is called Multifamily University, the webinars are about all kinds of things. Our latest webinar is about Airbnb. Our next webinar is about how industrial will need to be rebuilt in the United States because of everything that we're doing with bringing manufacturing jobs back to the United States. So so Multifamily University is probably the best place. Now, if you're a data geek and you'd like to see how I use data, go to Udemy, that's udemy.com, and search for my name, and you'll see my course. Right now, I have 14,000 geeky people taking my analytics course.
So for those of you that are listening, to follow Neal, simply Google his name, Neal, Neal, Bawa, Bawa. You can also find his course on Udemy, Udemy. I have courses on there as well. And also the webinars that he's doing, go to www.multifamilyuniversity.com, and you'll get amazing free content and education there. Neal, thank you so much for coming on here with me, and any farewell or parting words before we call this show a wrap.
I'd like to just share the one true saying that I've created myself, and that is that the Bible got it wrong by one letter. The Bible got it wrong by one letter, because it is not the meek that shall inherit the earth. It's the geek. It's the geek Richest man in the world, geek. Second richest, geek. Third richest, geek. You see a pattern there, Jay?
Yeah, there is a pattern. There is a pattern. Thank you so much, Neal. God bless you. Thank you for joining me.
Thanks for having me.